Time now to get the latest on the business news, and global stocks tumbling again as fears of a widespread economic slowdown because of the coronavirus worsened. Yuka is here to tell us more.
Well, hi Naomi. Well, the stock markets are in the red again as fears after another day of sell-off on Wall Street, with all the main indices tanking more than 3%. Global stocks have been on the wild ride for the last 2 weeks, sinking 4% there, rising 3% and then dropping again. Policymakers announcing measures to curb the impact of the health crisis have lifted shares, but the trend has been short-lived as the relentless spread of the virus outweighs reassurances and deepens concern that rate cuts and stimulus just may not be enough.
Market sentiment remains jittery these days because of investors' concerns that central banks around the world may not be able to contain the virus outbreak, and contain the economic impact of the virus.
Now then, let's have a look at how the markets are trading in Asia. Tokyo is leading the decline, down almost 3%, as you can see there, but Hong Kong, Shanghai Composite and Seoul's Kospi all down in negative territory, fairly deep into negative territory, shall I say. Now, stock markets surged earlier in the week after the US Federal Reserve cut interest rates and Congress passed an $8.3 billion additional spending plan to combat the spread of COVID-19. But the gauge of investor confidence, known as Fear Index, has remained above 30, far from what's known as normal range of between 40 and 20. As traders look for safer places to put their money, the yield on the US 10-year Treasury note, which is a return that investors get on the government debt they buy, has dropped to about 0.8, an all-time low. While the central banks of China and the US have taken steps to shore up the economy in the face of the coronavirus outbreak, the European Central Bank and those of France and Germany have not. Italy, however, has announced plans for a new stimulus package worth €7.5 billion to cushion the blow to its own economy. That would amount to almost 0.6% of the country's GDP and would increase its already ballooning debt, a step that goes against the EU's fiscal rules. Ellen Gainsford reports.
Emergency measures designed to ward off the risk of a recession. Italy's government has earmarked more funds to assist its health service, families, firms and workers. The government plans to spend €7.5 billion to protect its already ailing economy from the coronavirus outbreak, more than doubling the amount it initially proposed.
There will be measures that will let us support incomes and protect jobs and strengthen social service benefits. The objective is that no one will have to lose their job because of the coronavirus.
Due to the crisis, Italy is asking the EU for an exception to its deficit goal, hiking it from 2.2% of gross domestic product to 2.5%, a move that would also need to be approved by Italy's parliament.
We can already say that the European Commission is ready to work with us in good faith and understand the emergency that the Italian system is undergoing.
Italy is a European country the worst hit by the virus, with nearly 4,000 cases and over 140 deaths. The outbreak has already taken a toll on the country's economy, with sectors including tourism and hospitality particularly affected. Up to 90% of flights to and from some areas of the country have been cancelled.
OPEC is continuing its two-day meeting in Vienna. On Thursday, the group of oil producers agreed to push for a bigger-than-expected output cut to support prices in the face of falling demand due to the coronavirus. Ministers are set to propose production cuts of 1.5 million barrels per day run till the end of the year to the OPEC Plus group that includes Russia and Kazakhstan. Here's the United Arab Emirates Energy Minister speaking after Thursday's meeting.
I already told the media that we are all in this together, so it's not going to be that us making a decision alone. The assumption, we are all OPEC and non-OPEC going to be together. I'm hopeful that we will reach an agreement tomorrow, and let's leave it till tomorrow.
Well, the energy minister is saying we're all in this together. However, oil prices dropped amid concern that Russia and other non-OPEC members will not agree to this proposed deal. The international benchmark WTI and the US Brent both dropping almost 1%. And that's it for business for now.
Yuka, thanks very much indeed.